And the next presentation will be delivered by Rolf. He's the co-founder at Carnot Capital and investment director. He works as fund manager at Carnot Capital. We also first realized how good their performance, long-term performance has been many years ago. They've managed to outperform the main European benchmark since inception. So Rolf has been awarded our AAA rating. They started in 2007. It's an impact asset management company, impact investment asset management company, and they are very focused on also sustainability. So they want all their companies to be very good socially. He explained that perfectly. So they not only want very good long-term financial returns, but also they want their companies to have a positive impact on society. I believe that both things are as important for them, and he'll explain everything, and congrats on the great results, and also thank you for coming here today, Rolf.
Thank you, Javier. Thank you for having us. We're a bit a strange animal here today. As Javier already mentioned, we do like quality growth, and we do like sustainability. I'm going to show in a second why we like it and why we think it's a source of alpha, and we make returns on this. So we started in 2007, Javier mentioned. We run two theme funds, one on energy, one on resources. So it's a bit similar drivers. One is European, one is global. And they have similar drivers, and that's electrification, digitalization, and sustainability. Electrification, so theme funds, of course, as a value investors, you probably don't like theme funds too much, but we think these are long-term themes. So we started 17 years ago. They were top of mind 17 years ago. They are today, even more today, even more after the war in Ukraine. And they're going to be in 15 or 20 or 30 years, probably even, it's going to be a top priority of the world to produce enough energy and to produce enough resources. Electrification, of course, in the car, we have this drive for electrification. Maybe we have a slowdown this year. Not in China, though. In China, every second car that is sold is an electric car. Europe penetration is 20%, slightly lower this year compared to last year. In the US, we're low double digit. We have electrification in the buildings, smart homes. A lot of copper is built into houses today, much more than it was 10 or 20 years ago, and it will be more in 20 years. In the industrial world, in Internet of Things as a topic. And one driver of this electrification, of course, also is digitalization. We heard AI already as a topic earlier. It is a topic. It is going to happen. Maybe we're not making a lot of money as investors in AI, but it's driving the need for electricity. Alex and I, we were at the same presentation earlier this week, and AI is driving the use of energy. Just a story on the side. 10 years ago, data centers were built somewhere in the north where it's cold. These days, data centers are built in the desert because the desert has cheap available energy, photovoltaic. So the world is changing, and digitalization is driving the need for energy. Sustainability is a controversial topic. We think that it is a mega trend. Maybe it will be a bit slower next 4 years, of course, with the election outcome in the US. But the topic is driven by people. People want more quality in life. And of course, this is a luxury good. It's more important when you already have a car or you already have a house. That's more important. But also in emerging markets, we see this trend, and specifically also in China. And now, of course, in the US, on the government, on the nation level, it will be not as important going forward. On the state level, at least along the coast, it will remain a topic. But the good thing maybe of the new government is a lot of money was wasted or is wasted in plans that are subsidized by governments, and maybe that's the opportunity of the new government, that money is invested in a better way, in a more economic way, with a better return. But the trend, we think, is going here to stay. So Carnot Capital, we're a small asset manager, 250 million, two main funds. Thank you. We are a theme investment manager. We have a quality growth style. This is the team. Andres and myself, we founded the company in 2007. Andres is doing our back office, everything from regulation and so on. Lucas is a young portfolio manager, so with 3 investment professionals. Janina we newly hired for marketing, and then Nico is a young assistant that supports us on the portfolio management and then the board. I picked the energy fund to introduce quickly. So our topic, or the name of the fund, is Carnot Efficient Energy, or it could also be energy transition. And energy, you can save energy, of course, where the energy is used. So it's in the building, that's number 1, in the industrial process, and in transport. So these are our 3 main sectors. And then as a bracket over all these sectors is IT software. Because everything, when you want to save energy, you need to first measure. So you need sensors, silicon. You produce a lot of data. You need to do something smart with this data, so software, or today you call it artificial intelligence. And then hopefully you find a good way to reduce energy consumption. And then you again need some device to change something in the process. And in many cases, again, that's a chip or silicon. So these are the 4 sectors. Transport has been the tough sector this year. The auto industry is struggling in most places. Tesla is probably the exception there, but the European industry is fighting for survival. Also, some big names will not be here anymore in 10 years, so there's going to be change there. And luckily, we reduced the allocation from over 20 to over 10%, but it was, of course, a bad sector. We have 50% mid caps, 25 small, 25 big, and we heard the story. Small mid caps had struggled a bit, but we share, of course, the valuation thought that we're getting closer to a low point in valuations for small mid caps. 2 examples, and I start with the one that is at least reasonably valued, 25 times. You're going to fall off the floor with the next chart. Schneider is an industry leader, 150 billion market cap, and they represent all the topics or the mega trends I mentioned before. They're making the grid more efficient. They're making data centers more efficient. This is the biggest topic in data centers, apart from the speed of the chips, is the use of energy. And it's got a nice chart. It's trading at 29 times earnings. It used to be, it was, or it still is one of the top positions in the portfolio, but with the fairly high valuation by now, we're reducing the position. Great company, and they're doing a lot for sustainability, and sustainability is partially driving the business model of Schneider. Clients of Schneider want to reduce their footprint, either because they have to, regulatory reasons, or because they want to reduce the cost position. And you reduce the cost position by reducing the use of the consumption of energy, and Schneider sells the tools to reduce energy consumption. Second example, a bit better known in Switzerland, and now be careful, it's got a PE of 50 times. Belimo. We started in 2007. We've been invested in the company since 2007. It's a great company. It started off as a small cap, and now it's got a market cap of 6 billion. We're reducing the position as well. It was fairly valued when we started. It was expensive for the last 15 years or last 12 years. And our experience over time was we made more money with the expensive companies than with the cheap companies, but maybe we should focus more on the expensive though. Belimo is a small or is a Swiss company, started in '85 in Zürich Oberland, and the founders are still present on board level, but they're getting out of the business. It's a healthy company. It's 1 billion turnover. They're approaching a billion turnover, and the CEO makes 1 million or 1.5 million. So it's got a healthy culture as well, and that fits very well into our story. Belima does little devices. They're a global player. They compete against Siemens or Johnson Controls with in their niche, but they control a market share of 40%. They're number one in their niche. They spend most on R&D compared to their competitors. It's a good example of what we're doing. I'm not making a stock pitch here for Belima, but just to show you why we think these global mega trends I mentioned before, including sustainability, are a good base for returns and are a source of alpha. Why invest in Carnot Capital? We're founder-led. We're doing this for close to 20 years. Impact, our sustainability approach is not ESG. We think we go one step further. We do impact, and impact meaning the products and technologies of our investment companies. They do have an impact on the world, and this impact is reducing consumption of energy and resource, and this impact is one base of the business model, and that's why these companies provide higher growth rates and deserve higher valuations. That's it. Thanks for your attendance. Thanks, Javi, for having the opportunity.
Thank you. I'm sure there may be some questions from the audience. Do you have any questions? Any of you? Yeah, there's one question.
Yeah, I have one in relation to your impact approach. I mean, what's your theory of change? How does adding capital to your fund create additional change, I guess, in the real world?
I guess we're producing a double bottom line, financial return and a social return. And our goal is to produce financial return. And we're not changing the world, but for us, sustainability is a source of alpha. We produce extra return. And on the side, you do something good. But the main argument is you want to have, as an investor, you want to have a decent return. We have one investor that I believe that he's happy with 1% less. That's Alternative Bank Schweiz. And for every other investor, they tell you, yeah, it's okay to make a bit less, but 1st of January, when you do performance review, they have forgotten what they told you a year ago. So it's about financial return. Thank you.
Questions?